Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about the crypto bull, but more importantly, understanding the risks associated with cryptocurrency. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Now, with all the ads that have been in the Super Bowl, it's being dubbed the crypto bull. And it obviously has a lot of people thinking back to the dot-com bull back in 2000 when several companies placed ads. Now, what we're going to do is we're going to talk about some of the similarities, some of the differences, but more importantly, we're going to talk about how you can manage your risk accordingly. Okay, so managing your risk is something you need to understand when navigating the cryptoverse. If you don't manage your risk, then this asset class will just eat you alive. Okay. Now, when you first jump into the cryptoverse, it's easy to get distracted by all the shiny objects, right? And there are a lot of shiny objects. And what I mean by that, there are a lot of altcoins. Now, you should know that there are a lot of altcoins that will not stand the test of time, okay? So what I mean by that is if you think 5-10 years from now, there are a lot of cryptocurrencies that exist that simply will not be around. It'll be a ghost town for those cryptocurrencies in 5 or 10 years. So the one way you can manage your risk within the asset class is to at least first focus on the blue chips. Now, the blue chips are cryptocurrencies like Bitcoin and Ethereum. Those, in my opinion, are the only two blue chips of the asset class. Bitcoin first, and then Ethereum. Everything else, while I know a lot of people would like to claim that other altcoins should be classified as blue chips, I don't think they can. And I understand that makes some people mad, but that's just sort of the way I see the markets, right? I think Bitcoin and Ethereum are the blue chips, and that every other cryptocurrency still has quite a bit to prove. Now, with that said, one of the things I wanted to talk about was how do you manage your risk? And also talk about, comparing this with the dot-com bull back in 2000. We know what happened back then. So one way to manage your risk, as I said, is to focus on the blue chips. Okay? Doesn't mean you can't have altcoin positions, but just recognize that they are inherently a lot riskier. All right? If you search crypto bull on, just on Google, you'll get all sorts of headlines talking about, prepare yourself for this weekend's crypto bull, Super Bowl 2022, the crypto ad takeover. So naturally, it took me down memory lane back to the year 2000 before I was actually investing in anything. I was only 10 years old in 2000. But I do remember the dot-com bull back in the year 2000. So I decided to look it up and kind of jog my memory as to kind of what happened back then. Now, what's interesting, if you look up the dot-com commercials during the Super Bowl back in January of 2000, it featured 14 advertisements from 14 different dot-com companies, each of which paid an average of $2.2 million per slot, an average of $2.2 million. Now, here's the more important thing. There's lessons to be learned even when you're talking about historical crashes. All right, what are the lessons? You should take lessons away from it. One of the lessons, of course, is if you put all of your money in random dot-com companies that you really had no idea what they were about, a lot of those have basically just never been heard of again. Look at this statement right here. The sheer amount of dot-com related ads was so unusual, as had been widely referred to as the dot-com Super Bowl, and it's often used as a high watermark for the dot-com bubble. Of these companies, of the 14 companies, 4 are still active. 5 were bought out, but 4 are still active. Okay? So think about that for a minute. Out of 14, only 4 are still active when this was written. Now, what's interesting is to think about two things here. First of all, if you had been extremely, like if you had bet the family farm on some of these dot-com companies back then in the year 2000, a lot of them wouldn't have stuck around. But if you had focused on, say, the ones that actually were doing something and that weren't just all talk, but they were actually doing something and they had network effects and all that sort of stuff, if you focused on those, then all these years later, you would be doing incredibly well. even though there's been plenty of crashes between the year 2000 and 2022. So, what does that mean? What it means is to go back and think really hard about what assets you want in your portfolio. Do you want to focus on the blue chips and maybe a little bit of altcoins, which I think makes the most sense? Or do you want to be betting the family farm on altcoins that might not be around in 5 or 10 years? If you're not really, let's say, if you're not buying what I'm selling here, one thing we can look at is we can look at historical snapshots of the cryptocurrency asset class. Okay, so go back to 2013, a simpler time, right? When BBQ coin was rising in the ranks, right? What you'll notice, a lot of these coins, I bet a lot of people here have never even heard of, okay? And back then, I looked at these coins and I mean, they're obviously just jokes. I mean, I will say that cryptocurrencies, a lot of the ones in the top 10 today are at least a lot more serious than the ones back then. But it was a simpler time, and a lot of these you probably don't really recognize. Now, if you think, oh, well, that was 2013, you're talking about 9 years ago. Let's go back to 2015 and see if there were any that, if there's some you don't recognize. And I bet there are. I bet there's plenty of the ones on here you really have no idea what they are. You don't know what they do, and they probably don't even exist anymore. Okay? You can see them. All right, I'm not gonna name them out, but you can see all the different cryptocurrencies here back in 2015, and a lot of them are no longer around. Let's go to 2017. Okay, a lot of you guys were here in 2017, but still, if you joined crypto in 2021, if you look at the top 15, there is a lot on here that you probably wouldn't even recognize today if you only joined the asset class in 2021 or 2022. You've never heard of these because they just simply don't exist anymore. So the point, and we can even go further, right? We can go to, say, 2018. There's still going to be some cryptocurrencies that you might not recognize as you go down the ranks, even in the top 15, top 20. So the point, maybe even up here, I mean, some of these cryptocurrencies at the top, a lot of you guys likely have no positions in. So the thing that I want to focus on is, it's not to scare anyone. Investing it's a fickle beast, right? I mean, we like to pretend like we know what's going to happen. We like to say, well, this is more likely to happen than this other thing. But look, at the end of the day, no one knows, okay? I mean, it's just the truth. No one really knows. There's so many macro events going on that, you can't possibly, figure out exactly how each of them are going to affect the markets, whether it be geopolitical events, whether it be whatever the Fed's going to do, whether it be an institution decides to buy Bitcoin for the first time. Like, we have no idea what's going to happen, and there's no way to know, okay? All that we can do is prepare for various scenarios, okay? And this is one of those things where it's like, so you're saying it could go up or down. That's the point, right? If you haven't reached that point, then you still have a ways to go. Yes, that's the point. It could go up or down. No one knows what's going to happen. And so what you can do to protect yourself is to focus on the ones that you think will stand the test of time. Bitcoin and Ethereum, if you're new, are where you should start, in my opinion. It's not financial advice, but that's just my opinion. If you want to branch out from there, there's all sorts of other cryptocurrencies you can look at, right? There's all sorts of different cryptocurrencies you can put in your portfolio, but always remember that, some of these cryptocurrencies that you see, some of them are not going to be recognizable in a few years. So in, say, 2023, if we were to show people a snapshot from 2021 or 2022, there's going to be a lot of new investors that aren't even going to recognize some of the ones that just look so popular today. I know that's crazy, but that's just the way it is, right? It's just the way it is. The next crypto class will simply not recognize some of these cryptocurrencies. So if you want to, say, prepare for different scenarios, you want the upside potential, of course. You can have access or exposure to the blue chips, but also the altcoins, but I would say a lot smaller allocations to the altcoins in case things get ugly. And if you want to take on more risk, that's up to you, okay? But if you're new to the asset class, Bitcoin and Ethereum definitely are the two I think that make sense to focus on first, and they are at the top, right? 1 and 2. All right, now I want to talk about something else, right? Because we talked about this .com commercial during the Super Bowl and how it sort of marked the top for the .com, for these .com companies. Something that I thought was interesting, and we're going to talk about some of the similarities and some of the differences, right? So first of all, Bitcoin. What has Bitcoin done over the last year? Bitcoin has more or less gone sideways over the last year. Now, before that, there was a fairly nice rally, but over the last year, it's more or less gone sideways. And if we look at, say, the total cryptocurrency market capitalization, this is what we get. So let's compare this, and let's compare it to, say, the NASDAQ. Okay, we're going to compare it to the NASDAQ back in the year 2000. Okay, so let's go look, what was the NASDAQ doing in the year 2000? So we'll go all the way back, and we'll see what it was doing. So here's the year 2000 over here. But look at what it was doing leading up to it. Okay, it wasn't really going sideways for a year. It was more or less in a fairly systematic uptrend for a decade, right? I mean, a decade. It was just systematically moving up, and it led into this parabolic rally blow off top. So one of the differences between, say, now and back then was back then we were in the middle of a parabolic rally that was ongoing for quite some time. And the Super Bowl, the .com bull, occurred right here. Okay, so it occurred about 3 months before the top. 3 months, 2 or 3 months before the top is when the .com bull occurred. But you can also sort of look at this chart and maybe compare it to the total crypto market chart. And there are some differences here, right? So I don't want people to think that things have to repeat in the exact same way, because they don't. You could certainly see something completely different play out. But what I will say is that you would be foolish to not include the downside risk in trying to figure out what your portfolio should be made up of. Because if you don't include the downside risk in what your portfolio should be made up of, then there is a possibility you could be making the same mistakes that some of the investors 20 years ago made. Okay, now again, I was not an investor 20 years ago. I was only 10 years old, so I can't really speak to how it felt back then. I've talked to a few people to try to get their opinions on it, and what I would say, a lot of people have said that it felt a lot more euphoric back then. But there are some similarities. For instance, people were quitting their jobs and making more in a day trading these stocks back then than they were, say, their entire salary. And of course, you probably know some people in crypto that have done the same thing. But furthermore, some of the differences are that some people have said it doesn't feel quite as euphoric. But I think, one of the reasons I don't think it feels quite as euphoric is because Bitcoin and the entire asset class, look at this, right? This was a parabolic rally, but then since then, we've basically just been going sideways for the most part, right? We've been going sideways for quite some time. And you compare that to what this was doing. This was above its bull market support band leading into that rally, which this was the .com bull right here. And then we spiked up, and then we came down, and then we had this pretty awful crash, okay? By the way, this was an 80% drop, more than 80% drop, 83% drop. So, when you think about it, there are some similarities. There's also some differences when looking at the chart, right? This was into a parabolic rally. The entire asset class for crypto did have a parabolic rally, but it's more or less been going sideways ever since. In the current time, we're more so in a downtrend. Now, what are some other things, right? What are some other things we can talk about? Well, one thing to keep in mind is back in the .com bubble, I think one of the things that people sort of fell into is if you ask them what does their company do, they would just tell you about its potential, not what it actually does or how it's currently making money. So if you were investing in a cryptocurrency today, you'd have to ask yourself, what does it actually do? Or is it just promising to do something in, say, 10 years or in 3 years or in 5 years? If all you ever get are future promises of what they're going to do, rather than an actual acknowledgement of what they're doing now, then you need to think about that and think about how that should affect the portfolio allocation you would want in that company or in that cryptocurrency, okay? Because whether there's a crash or not, you want to make sure you're going with the ones that will likely stand the test of time, so that if a crash does come, you expect them to fully recover and continue higher, okay? There will be altcoins that will never make it to a new all-time high, even if Bitcoin doesn't crash, right? Even if Bitcoin holds the line here, there will be cryptocurrencies that never recover to their prior all-time high, and that's just the way it is. That's the way it always is, okay? So Bitcoin and Ethereum first, in my opinion, not financial advice, but those are the two that are the most likely to reach new highs. It doesn't mean that others won't. It just means that they're riskier. Okay, they are inherently riskier. This is my opinion, of course. All right. There are some similarities in the fact that you're seeing a lot of cryptocurrencies take over the Super Bowl, just like you saw a lot of .com companies take over the Super Bowl back in the year 2000. One of the differences is that during that time, we were in the middle of a parabolic rally that was bouncing off that bull market support band, and it lasted for about 3 more months after the Super Bowl. Right now, the asset class doesn't look anything like that. I mean, we've been in a downtrend for the last 3 months. We're certainly not in a parabolic rally right now, and we are below the bull market support band, right? So there definitely are some differences in terms of the actual structure of the market back then compared to today. And back then with the NASDAQ, I mean, to get down, say, 40%, this was the drop to get us down to that level. We've already dropped that far with the total cryptocurrency asset class, right? We're already down about 40%, right? So, I mean, we've already made that drop before the Super Bowl even aired. So I wanted to, at least wanted to mention that. Now, some other things to consider are there are definitely things that, like, if you think back to the .com, everyone remembers pets.com, right? And it's one of those things where if you think about it today and you think about what cryptocurrencies exist today that are the equivalent of, say, a pets.com. And, I mean, it was hard for me to really think of any, right? Like, I couldn't really think of anything to say. So I was like, well, I don't know. I mean, there's probably some similarities between some cryptocurrencies that are like pets.com and not, but really what you have to think about is you have to think about what are some altcoins that don't really do anything. They don't really provide utility. And if all they are is something that doesn't really provide utility or anything like that, then you have to wonder, right? Like, what's the point? What are they actually providing? Is it worth having an allocation in that cryptocurrency? I think it makes sense to have allocations in some altcoins that I actually believe in what they're doing. But I'm personally much heavier into Bitcoin because I mean, at the end of the day, I fully expect Bitcoin to recover and put in new all-time highs no matter what happens. It's hard to say that about anything else other than probably Ethereum. Hopefully everything does that I have, but I don't know, right? I mean, it's one of the things with investing. You just simply don't know, and you just have to take on certain risks. Another thing, there is another similarity that I wanted to point out, and that's the actual total market cap. Now, the money today is a lot different than back then. Okay, so if we go and look at, say, let's go look at the money supply between, say, today and what it was all the way back then. And if we pull this up, one of the things we can see, let me switch this over to monthly, and I will hide the bull market support band. So there's definitely a lot more money in the world today than there was back then. Okay, so if you think back to like the year 2000, if you look at just say M2 and we compare to say how far has it increased since March of 2020 or 2000, it's gone up by about 370%. So there's a lot more money today in the world. But one thing I thought was somewhat interesting, maybe that's not the right word, was I was reading this article. I was sort of like digging around the archives and reading this article back from November 9th of 2000. And it was talking about how the combined market value of 280 stocks that were basically an index of the .com stocks. So if we read this, index of 280 internet stocks is down 1.7 trillion from its 52-week high. What's interesting is that asset class, the index of the .com stocks, reached 2.948 trillion at the peak. 2.948 trillion. And then we know what happened, right? It dropped down significantly. Now, if you go look, and this is a little scary if I'm completely honest, right? If you go look, the total crypto market cap at its peak here reached, according to this chart, around 3 trillion, right? Around 3 trillion. So it's about the same. So again, there are similarities, there are differences. Some of the similarities are that, you do have similar type things like pets.com. There's some projects out there that really don't deserve to have your money invested in them, okay? In addition, the similarities will be, there's a lot of tons of money going into ads, right? They're trying to get a lot of new people in the space, which is a good thing, and I'm happy you're here, but I want you to understand the downside risk. I don't want you to get sucked in to some random micro cap that's likely never to recover to anything, okay? So make sure if you are joining this asset class, it is a bumpy ride, okay? It's not, it can be stressful at times. The longer you stay in it, the more apathetic you will be. What I would say is I generally expect Bitcoin to trend up with time. If you're new here, my general thinking is that it can be best modeled by these logarithmic regression bands, and that we generally just assume that Bitcoin trends up with time. And it's hard to know exactly where it's going to go at any given time, but when we're in the bottom, it's more likely to go up. When we're at the top, it's more likely to go down. When we're in the middle, we're in no man's land. It could go either way. We don't know, right? We just simply don't know. But the best way to protect your capital, if you're joining this asset class for the first time, is to focus on the blue chips, make sure you have cash in hand in case we do get a further dip, considering the macroeconomic conditions. And then third, please understand the projects you're investing. So beyond the blue chips, the altcoins, make sure you pick ones that you actually think are providing utility. They've proven they're providing utility. If they don't do that, if all they do is provide a promise of what they're going to do in the future, then just remember there were a lot of investors 20-something years ago that were promised the same thing, and they watched their money disappear. So, investing in crypto is very, very risky. You can make money if you stick around and you stay focused and you invest responsibly. Do not overinvest. I think it's crazy personally to take out debt to invest in the asset class. That is a recipe for disaster. I think you should not invest more than you can afford to lose. And if you are investing, have a multi-year outlook, okay? Don't invest with the idea that you're going to be cashing it out in 3 months or 6 months. Invest with the mentality of, you know what? You're going to put this in the market. You're going to let it sit for a few years, and then you'll think about taking profits whenever the next parabolic mania phase occurs. We don't know when that's going to be, but that is the only good way, in my opinion, to invest in the asset class for the long term. And of course, this is not a day trading channel. There's plenty of people out there that do day trade, and I think it's very difficult for most people to do. And that includes me. Okay, I stare at the charts all the time, and I would not be any good at day trading. There are people that are better at it. I mean, I'm not going to pretend like no one is good at it, because there are people, I'm sure, that are good doing it, because there's people that do it full time. But you also have to think about the fact that if you go back and look at all the hedge funds, how many of them outperformed the S&P last year? I think I saw there was only 3 hedge funds. So out of all these hedge funds where they hire all these quants to spend their entire time picking out which stocks are going to perform well and which ones are not, only 3 outperform the S&P. So you have to understand, I mean, even if you have the quote unquote best guys in the world, if you have the best people in the world working on this stuff, and only 3 hedge funds are actually outperforming the S&P, then realistically, how good could I be at doing it? So I just assume that I can't, and I look at this as a macro scale thing, and also I think dollar cost averaging into the market makes a lot of sense. In the stock market, it's actually statistically shown that lump sum is better than dollar cost averaging. But I think in crypto, given the fact that you can see these 40%, 50% swings all the time, I think it makes a lot more sense to dollar cost average. And what that means is basically, if you're new to the cryptocurrency asset class today and you decide, you know what, you want to buy some crypto, you could buy some here, and then next week, if it goes up, then you could buy some here, or if it goes down, then you could buy some here. Or next month, right? Whatever it is. And then the following month, you maybe buy more. So maybe this one comes back down and you buy some here. Maybe this one goes down further and you buy some here. And then the following month, maybe it goes up and you buy some here. So the point is that you just slowly allocate into the asset class. You don't want to put all your money in here, typically speaking, because you run the risk of a crash, right? If you put all your money in here, then you don't give yourself the flexibility to take advantage of a dip back down to these levels, okay? So that's why I would argue that dollar cost averaging is the best way to navigate this thing, rather than just YOLOing everything into some altcoin because you saw some great ad during the Super Bowl. So try to invest responsibly. Again, I know these videos aren't going to necessarily appeal to everyone, but I cannot sit here and tell you that things are going to be straight up, because they're not. It's not up only. it's up and down. For Bitcoin, it's mostly up, but it can go down. So try to invest responsibly, focus on the blue chips. If you're going to put money in altcoins, make sure you understand what they do. Make sure you understand the utility they provide, because there's no guarantee they're going to be here in 5 years, and have a macro outlook on the market. Thank you guys for tuning in. Hopefully this video was informative, and hopefully it helps you understand the downside risk and how fickle this asset class is. We have no idea what's going to happen in the short term, but whatever happens, you need to have a plan. If you don't have a plan, of course, you're planning to fail. Thank you guys for tuning in. Subscribe. I'll see you next time. Bye.